Okay, good day, young Padawans, and how is your weekend all going? So today we're gonna be talking about last week price action on GBPUSD. So right here we're on the weekly time frame, and for the sake of the public, I won't disclose much of my knowledge right here, but I will make sure I figure out key things, key points that will help you and advance your knowledge more on price action. Just in case you won't be understanding much of this thing I'm explaining here, the before note is everything I am about to say or I'm saying right now is actually from the CRT concept, just refined in my own terms and understanding. So right here we're on the weekly time frame, and I'm not actually doing an outlook but a trade breakdown. So this is our last week price action, our previous week price action on GBPUSD, and this is our current week price action, which took one side of the range and closed back in the range. So I think we are to talk about this week price action, this candle right here. What is the formation of the open, the high, the low, and the close, and ask ourselves critical questions, and the days that offered high risk to reward, and also the days that offered entry but wasn't good enough to press the button. And before I go further, I would like to tell you that every day on the chart, every week on the chart, depending on the type of trader you want to be, every day on the chart, every week on the chart, every 4-hour candle, every 1-hour candle always has a trade, always gives us a new opportunity to execute. But because we are not some random gambler, or because we are not just executing by seeing maybe a 5 minutes CRT manipulation candle. So we are critical thinkers. We think logically before pressing the buttons. So summarizing this means that every day offers a chart, every day offers a trade to execute depending on the order flow that is aligned with. So every day offers a trade to click the button for. But more importantly, look out for high profitable setups. Now I'm going to the daily time frame. Remember, we are to talk about this week's price action, and to the daily time frame right here, I've already marked out from Monday to Friday. This is our Monday candle, which took Friday's high and closed back in the range. And I'm not here to talk about this price action right here, but let me just briefly make you understand something. You see this low right here, this Friday's low right here, it didn't complete liquidity. Why didn't this Monday candle manipulation, why didn't it sponsor the algorithm to complete liquidity? And why is there some kind of choppy price action right here? Why? And the answer is this: it may be an SMT, maybe it completed liquidity on Euro USD, or also it completed liquidity on DSY. So in this case right here, I can say it clearly that it's because of we can say it's because of SMT. And don't ask me, go to your charts and look for it. Don't ask me, go to your charts and look for it. SMTs on Euro USD or DSY. Maybe that could be the main reason drawn liquidity wasn't met here. Met slightly, but just in case you put your TP here, maybe you will lose all your money. But there's in this concept of serialities, it says 50% of the range is always 80% of the time met, and it didn't disappoint right here. So 50% of the range was met here, and I won't figure it out for you. Go to your chart and figure it out. I've said it, but for the sake of this video, this is the candle range right here, and somewhere here is the 50%. How did I do that? With the Fibonacci tool, from the high to the low of that candle. This our 0.5 level is our 50% range. And remember, in case you are taking a CRT trade, for a newbie trader with the experience I've got from the chart, that candle that manipulated one side of the range, which is this Monday candle right here, manipulated one side of the range, should be the low or the high of the candle should be your first target, then the 50%. Now after taking partials, you can hold your trade till the end of that candle range. Now I've broken down what happened here. Let's get to the main deal, the main charts. Right here we are to talk about Monday, Tuesday, Wednesday, Thursday and Friday price action and the anatomy behind what really happened during these days on the price action. I won't actually like this video to get long, so I'll make it short as possible. Now from the daily time frame, we go to the 4-hour time frame. Daily to 4-hour time frame to refine our view. So this is our Monday price action. Yeah, and we can see it clearly right here that Monday was a lot of range and some kind of choppy price action with some manipulation, because remember Monday took out Friday's high and closed back in the range. So I won't like to disclose more here, but I can assure you that here is a 159 candle pattern model on the 4-hour time frame. Yeah, even in a choppy market you can still have some trades to execute, but not all time. Don't participate yourself in every opportunity on the charts. Don't be a trader that want to execute 5 trades in a week, and some are even worse. So be a trader that is more selective, choosing 2 trades in a week, 1 trade in a week, and you are done. Participate in those large movements. So go to your charts. I don't really want to tell you the reason why this candle right here is the 1 and this candle right here is the 5 and this candle right here is the 9. Go to your chart and look for it. 159 candle model, 4-hour CRT pattern model, and is a 3, okay, it's a 4 5, okay, I think it's a 5 pattern CRT model. with some inside bars till drawn liquidity was made. So here on Monday, we can say it clearly that there was a trade on Monday. There was a trade on Monday. This is our 4-hour CRT high and our drawn liquidity. So our range low. Our range low, which serves as our first target. And my students know about these candles that doesn't have wick and it's aligned with the order flow. You can choose this as your second target, or you can close fully here. So rather, let's choose this and make this an imaginary line. Let's just, for the sake of this video, let's just keep it like this and think of it that it's not existing. So right here on the 4-hour time frame, we said we saw the 159 clean CRT candle model. Now from the 4-hour, I go straight to the 5 minutes time frame alignment. I go straight to the 5-minute time frame. What's price actually doing? Where can I see my key level? Right here on the 5-minute time frame. Okay, here we are on the 5 minutes time frame, and Monday price action offered us a nice close below order block, but it wasn't retraced. Our 5 minutes order block wasn't retraced, but when you go higher, maybe on the 15-minute time frame, I think that order block should be retraced, and the order block is forming at a key time. Remember, the high or low of the day always forms at a key time. It's just for you to figure out those times and position yourself right before executing your trades. So right here on the 5-minute time frame, GBPUSD, for the sake of this, I won't be marking out order block in all my videos, but let me just mark it out again for the sake of this public video and for newbies that will be watching this video in the future. This is our order block right here, and the concept says also that the midpoint of our order block is very sensitive, so I don't go lower than this. I'm enough with the 5-minute time frame. So this is just my micro entry time frame. Right here on the 5-minute time frame, we saw a candle, this candle right here, which was engulfed by our order block, forming an FVG, and our FVG was retraced a little bit. Yeah, our FVG was retraced a little bit right here. Right here, our FVG was retraced a little bit. So in this case, we can choose this as our entry, or immediately we are seeing this close below, we can trigger our entry. But normally order block should be retraced. Maybe on the 1-minute time frame we can see a clear retracement, but I'm not actually going to that 1-minute time frame. Do that yourself. So right here on the 5-minute time frame, this clean retracement, because this is our FVG right here, our fair value gap from this low to here is our fair value gap. So let's just mark the open, let's just mark this as our order block. our other block. You just keep it like this and write other block. um, Bearish other block, yeah, line. So our bearish order block, our fair value gap, sorry, our fair value gap, and observe here carefully, our fair value gap was retraced a little with this touch right here before the move started dumping lower. So right here, because this video is getting longer, I'm breaking down Monday's price action. Tuesday, Wednesday, I won't actually break it down like this. So go to your chart from what I taught you on Monday's price action. Reverse engineer and dig deep on Tuesday, then Wednesday price action. But I will discuss a little about Thursday price action. So right here we are shorting, and let's say our entry was exactly at that tap of the fair value gap. So our stop loss will be here, 7 pip, and our take profit will be here, 47 pip. And that's not bad. A 6.5 RR, you are risking 7 pip to earn 47 pip. Let's just say on a $10 account, that is, you are risking 70 cents to earn approximately $5. Let's say $4.70. And you can actually scale it like this also. With this 7 cents, let's just say you are pressing the lot size of 0.02. that is, you are risking $1.04 to earn $8 or $9. And that's not bad. With your $10 account, you have doubled the account. That's pure risk management and sound money management. You are not flipping, but you have doubled your account due to you are very observant, and yes, let me just put the word, you are very observant and you're a critical thinker. So that's just it. So that's just rounding up the Monday price action. Monday gave us a 6RR trade only if we were observant. Now going to the Tuesday's price action. Going to the Tuesday's price action. Let me delete all this. I don't really like my chart to be messy. Going to the Tuesday's price action, and let's go to the 4 hour, because that on the 4 hour was where I saw entry models on the 4 hour time frame. So right here on the Tuesday's price action, the Tuesday price action wasn't actually aligned with the order flow, and I don't really like taking trades that isn't aligned with the order flow. The Tuesday's price action was just some kind of random reversal. And it also offered some 159 entry model, but I don't really like this kind of price action that isn't aligned with the order flow. So the Tuesday price action went lower first, opened, declined, dump, then some kind of reaction here, then reversed a little. Then Wednesday started the move and dumped lower. Now on this Wednesday's price action, let me just explain something quick. On this Wednesday price action, let's just say you are not seeing this candle right here. Let's just say this is what you are seeing in front of you at the moment. Yes, this is what you are seeing in front of you at the moment. This right here is what you are seeing in front of you. So we mark this out as our order block. Why? It swept liquidity, right? Yeah, it swept liquidity. We mark it as our order block. Our 4-hour order block, and it also swept liquidity right here. Our order block swept liquidity. Now observe very carefully here. Another liquidity was swept during this 159 entry model. Don't joke with the 4-hour time frame as a newbie. Don't joke with the 4-hour time frame. 159 entry model, and where should be our first draw on liquidity? Our first draw on liquidity should be this low right here. Don't think of this immediately. The candle that manipulated either the low or the high of that candle should be your first draw on liquidity, aligned to the order flow. I know why I'm sticking to this. Order flow, order flow, order flow. Don't trade against the trend. Trade in the rhythm of the trend. Flow with it. Now this is our second draw on liquidity. I know it's close to each other, but let's just respect it for the sake of this public video. And observe right here carefully. There was a liquidity sweep. Let's just mark it out. There was a liquidity sweep. This video is getting longer, and I don't really like it. Okay, let's use this. Nice. Sorry. Okay, right here there was a liquidity sweep, and that liquidity sweep, this candle range right here is our 1 a.m. This is our 5 a.m. 4-hour candle. 5 sweeping the 1 a.m.'s high, and our nearest drawn liquidity should be the 1 a.m.'s low. So right here 159. Hope you are flowing. 15159. Now projecting it on the lower time frame, the 5-minute time frame. Here it is on the 5-minute time frame. This is the manipulation right here. So on the 5-minute time frame, our manipulation candle, this is our key level. Right here is our key level. Let me put it another color, blue. Nice. Right here is our key level, and right here is our top soup, our liquidity sweep, TS. So remember our 4-hour key level, order block, bearish order block, our first drawn liquidity, which is 5 a.m.'s low, and our second drawn liquidity, which is 1 a.m.'s 4-hour candle range low. So right here we can't see a clear order block. Yeah, and that doesn't mean that you are wrong, no, but right here we can see a rejection block from this high to this low right here to the open. Sorry, from that high to the open is our rejection block. And rejection block concept says that the midpoint of the rejection block is very sensitive, but in this case right here, the midpoint wasn't tapped, but everything from the high here to the open, is an entry zone. It's just for you to open your eyes and trade carefully. From the high right here to the open is our entry zone, but projecting it lower on the lower time frame, which I wouldn't do that, we will see an order block, maybe a 1 minute order block or a 3 minute order block, which will retraced on the lower time frame, and I wouldn't do that. Go to your chart and look for it. But in this case right here, I'm choosing these FVGs. I'm not a trader that wants a 1 pip stop loss. No. Don't be too precise on your entry. Don't try to prove anything on your entry. Don't try to prove to the world that yes, I can use a 0.8 stop loss and win a 50 RR trade. Majority of the time, that your 0.8 stop loss will hit you hard on your margin. You will be taking those stop loss majority of the time, and price will move to your direction. And I failed a lot of times in those kind of situations, trying to make my loss so tight, some 2 pip stop loss, some 3 pip stop loss. I've never tried 1 pip stop loss, but maybe someday. Now let's talk about this quickly. Then we choose the short position, and this is our entry zone right here. Immediately retraced, tapped, and that was a nice trade. Three pip stop loss, and our final target 17 pip take profit. 6 RR, that's very nice. A 6 RR trade, just 3 pip stop loss and the 17 pip 16 or 17 pip take profit. And you'll be like, yes, on a $10 account is a small amount. Yeah, I know it's a small amount, but to you, ask yourself critical questions, logical questions. Am I ready to risk 3 pip, that's 30 cents, to earn this trade? If it's nice with you, okay, just risk it. But if you feel like adding more positions or adding more to your lot size, you can possibly use a 0.3 lot size. 0.3 lot size, which means 3 pip stop loss, that is 30 cents times 3, that's 90 cents, not even up to $1, and you are still within your 1% risk per trade. You are still within your 1% risk per trade, not flipping and okay, this is a 3 pip stop loss, let me risk 0.1, let me be losing $3 to be earning $17. Yeah, I can say also is actually nice, but when taking those type of trade, randomly pressing lot size, it will blow your account quickly than managing your risk like this. So in this type of scenario, I would advise you maximum 0.03 lot size, and just earn your $4 to $3 with a 6RR win rate and get the fuck out of the charts. Sorry for using that word. Now I've broken down Wednesday's price action, and right here, yes, there is a breaker block entry which I wouldn't talk about, a breaker block entry which was retraced, and the high of our breaker block wasn't actually tapped. The high of our breaker block wasn't actually tapped right here. Wasn't actually tapped. So, but I wouldn't talk about that. Now let's go to the Thursday's price action. Let's go to the Thursday's price action. Damn, this video is getting longer. So for your assignment, zoom in and know about what happened on Friday, but I'll still talk about that next week in my trades breakdown. So right here we're on the 1 hour time frame, Thursday. Let's just do a quick breakdown on Thursday price action. This video is getting longer. Thursday swept Wednesday low, and previous day lows and highs can be used as our key level. These lows and high can be used as our key level. So this is our key level. This is our key level. This is Wednesday low. This right here is Wednesday low. So I think this is 1 a.m. candle, if I'm sure. Okay, yeah, this is the open. 1, 2. Okay, so tapped on key level, and this is what I want you all to emphasize on. Whenever the key level is tapped, don't just immediately press button. And I took a loss on this trade before re-entering. When a key level is tapped, look for this. Look for a lower time frame liquidity sweep. And when I say that, don't just immediately go to the 1 minute time frame or the 5 minute time frame looking for that. All these things are aligned with time. Now, for the sake of this video, right here, key level tapped, sweeping Asian's low. I was tricked to this trade that day because I had it in mind of London session secret model. So immediately I saw that London Asian session low has been swept. I entered the trade immediately, and I was stopped out with this candle right here. So I re-entered because I was 85% sure with my analysis. So a slight turtle soup happened right here, which took me out, but I re-entered this trade. Yes, I can remember clearly. You can go to my Telegram channel to look for it. So I re-entered this trade, turtle soup. There's liquidity sweep, and remember, our Wednesday's high is our first draw on liquidity. There is in some case you can use your Asian high to be your first draw on liquidity, then the daily high as your second draw on liquidity. And remember, there is a This Wednesday high, this Wednesday candle offered a two model CRT candle pattern. Yeah, it's offered a two model CRT candle pattern. Why did I say that? Let's go to the daily time frame. On the daily time frame right here, you can see it clearly that same Thursday that manipulated Wednesday low completed the drawn liquidity, and right here Wednesday our first drawn liquidity. Remember, 50% of the range must be taken. Don't joke with it. Even if you are wrong or right 80% of the time, you will still win. So 50% of the candle range, you shouldn't joke with that. Sorry. So first drawn 50% is our first drawn liquidity. Remember, we talked on the 1 hour time frame. The Asian range also can be used as your drawn liquidity in case you want to scalp, like you just want to make quick money and get out of the market. So Asian range, which I wouldn't emphasize on that as much, but 50% of the range, don't joke with it, and the end point of the range as your second drawn liquidity. Then you can target other drawn liquidity, the Tuesday and the Monday's high, which was delivered nicely. And all these right here are low resistance liquidity run. All this right here are low resistance liquidity run because no liquidity was swept till this Thursday gigantic candle engulfed and swept the liquidity. Now going to the 1 hour time frame. Back to the 1 hour time frame. Liquidity sweep, order block. This is our order block right here, our 1 hour order block, which if you go to the 5 minutes time frame, you can see some kind of micro order block, this liquidity sweep right here. So our 1 hour order block, let's just say for instance you are taking this trade from the 1 hour order block as a beginner, and your stop loss right here 20 pip isn't actually bad, and your take profits Wednesday's high first, the midpoint first, but the midpoint is actually giving us some 1 RR trade, so that's not nice. Now let's think of Wednesday's high. Wednesday's high is giving us 2.5 RR trade. That is not bad. A 2.5 hour trade is not bad, but let's think of Tuesday's high. Tuesday's high also offered a nice RR, I think up to a 3 RR. Yeah, Tuesday's high is nice. Now Monday's high offered the highest RR according to the 1 hour time frame, a 20 pip stop loss and a 100 pip take profit, which gives us approximately 5 RR, and that is 4.78 RR. But refining it, going to the lower time frame, let's just say 15 minutes or 5 minute time frame. Let me just go to 5 minutes. Go to 15-minute time frame to look out for better entries. So on the 5 minute time frame right here, on the 5-minute time frame right here, yes, we can clearly see the liquidity sweep. This is our order block on the 5 minutes time frame, our bullish order block, this right here. This right here is our bullish order block on the 5 minutes time frame. Let's make it blue and bold. Our 5 minutes order block. And what makes it an order block? It swept liquidity. It swept liquidity right here at a key time. Yes, at a key time, swept liquidity. And right here on our 5 minute time frame, sorry, if we are to target Wednesday's high first, you can see it right here on the 5 minute time frame. It offered an 8 pip stop loss instead of 20 pip stop loss according to the 1 hour time frame. 8 pip stop loss and Wednesday's high first. Remember, Wednesday, Tuesday, I think so. Sorry. Wednesday's high first, which is this one right here. Okay, somewhere here. You can see it clearly. It offered us a 52 pip take profit, and Tuesday's high offered us a 65 pip take profit. So observe the RR right here, 6 RR right here, 7 to 8 RR, yes, 8 RR. Then right here, Monday's high, 13 RR, 13 risk to reward. Monday's high right here, yes, 13 risk to reward. So it all involves on refining your trades and going to the lower time frame, refining your trade and going to the lower time frame. But in some cases, this type of entry will hit your stop loss and move straight to your take profit, and it's kind of annoying. That's why you need to stick to one time frame for your entries. No matter the risk to reward it offered you, just stick with it for your own psychological stability. So I hope you found something insightful in this trade breakdown, and if you like more of this content and you feel like yes, it's helping you in advancing your knowledge in technical analysis, you can subscribe, like, share, and tell me about stuffs, questions, things that are bothering you in the comment section so I can make more videos on that. So have a nice day, good luck, and good trading.